please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report. Well, it's 12 noon. It's a Monday morning and things have been looking very, very good today. The Nifty is moving towards a 10,800 odd mark. It's been a good start. And in fact, the only dampener would be that the mid-cap index now is up only around 0.2%, around 0.3% in comparison to around 5 to around 0.5% to around 0.6%. So from the broader market, some profit booking, but no complaints really. We're moving towards 10,800. Hi, Lata.
Hi, Nigel. Actually, no complaints at all. This is the classical way in which markets should move. That first, the big boys take a huge stride forward, and then the mid-caps go along. This is macro tailwind that's pushing the markets. Aside from the global cheer on risk assets, I think the IIP numbers, even if you take off the outliers like some enzymes and tacids, it still shows a higher than expected growth for the month of November. Only going by top line, it's a 25-month high. Okay. And clearly the market is therefore, striding ahead on that macro tailwind of growth. There is, of course, other reasons as well with the global liquidity and the domestic liquidity coming in thick and fast. All
right, Lata, also just the 10,700 put, I don't know whether we can get that up. It's added close to 35 lakh shares in a single trading sessions. We are only around 3 hours into trade. So 10,700 is added 35 lakh, telling you that the bulls believe they can defend the 10,600. 10,650 is something they believe they can really defend, Lata.
The numbers should have come by now and we are waiting for it. Let me not overstate the importance of these numbers. The Reserve Bank very clearly watches only for the CPI numbers. That is the target they have been given, 4% or CPI plus or minus 2% for the 5-year period ending 2020. So this is more an academic number which helps us gauge how the markets, how the inflation numbers are at the wholesale level. We have Upasana Bharadwaj, senior economist at Kotak, joining us. Upasana, good morning. Thanks much. Well, while we wait the WPI numbers, tell us what you expect and whether that 5.2 gives you any sense of hawkishness from RBI.
Well, clearly, Lata, we are expecting 4.1% for WPI. And talking about the CPI readings that were released on Friday, very close to what we were expecting at 5.1% versus the real number of 5.2%. So I think, of course, having said that, as we go forward, the first 6 months of this calendar year definitely do not bode too well in terms of the inflation numbers that we will be seeing. We would be heading with an adverse base effect that could possibly give the CPI reading towards 5.5 to 6%, and that is clearly something which RBI will be watching out for. And to add to that, of course, so we have commodity prices rising, oil prices rising. So all in all, it doesn't really look too good at this point in time, and clearly it should provide a hawkish bent to RBI.
Okay. Well, still waiting for the numbers. Just keeping it's supposed to be released at noon, but markets are at a record high. Are you changing your growth numbers after the rather meteoric rise in November IIP 8.4?
So at this point in time, we actually have been retaining our 6.5% GVA estimate for FY18 as against CSO's earlier released number of 6.1%, because somewhere we believe that the CSO's numbers have been a little conservative, and we may see an upward revision to those final numbers. So somewhere 6.3, 6.5, that's the range we are looking at this point in time, and we would like to retain that view. And I think now with this IIP number being so hugely positive, we'll have to, of course, see whether this sustains into the next few months. But yet, it does provide a fillip to the industrial growth numbers, and hence it does provide a further upside to the CSO's growth estimates that were released earlier.
Okay. Well, I really wish we could get this WPI number out, but no luck. Anything on the markets? I mean, yesterday we had a very good non-durables, consumer non-durables number. Chances are it should reflect in the FMCG and such other stocks. I can see Godrej Consumer as one of the big gainers, but FMCG generally?
Well, you know, Lata, if you take a look at it, the mid-cap index, as we were discussing earlier as well, it's not matching the frontliner step for step. HUL has moved to the low point of the day, so that intraday chart as well comes up for you on the screen. And a couple of other stocks that are seeing some profit booking from the broader markets. I think MRPL as well, that stock has taken a bit of a knock. We have Repco Home Finance as well, that's come in to the low point of the day. The reason, though, that the Nifty is really unmoved is because of HDFC. Now, that's a big heavyweight over there. That's just moving higher. It's currently sitting with a gain of around 6%. So pull up the intraday chart over there. That stock, in fact, is moving higher. And I think SBI as well, it's still holding in the green with close to around 0.3%. The mid-cap index, though, now it's up only around 0.15%. Remember, in the morning, it was up more than 0.5%. So just keep an eye out. There is some nervousness in the broader markets. But as Lata said, you know, that's the way bull markets move. First, the large caps move. And in fact, we could see the mid-caps catch up.
I think there are some agency reports saying that the WPI number is less than 4%. But we still have to wait. There it comes. Okay, 3.58. Wow, that's now some fall, and it was always expected that the WPI number gets influenced by global factors, so will rise a little less than the domestic. But 3.58. That's quite an impressive number, or at least it reduces some of the scare created by the CPI. Your first reaction, Upasana?
Yeah, clear. I think it's a very positive reading. Of course, you know, if you look at the last 1 month's movement in the commodity prices, we have seen a 10 to 12% increase in Brent. We've seen a significant increase in most of the base metals as well. But probably what's happening is the rupee appreciation story that is there, that is helping, you know, bring the WPI to a lower level. And to add to that, I think food inflation would probably have been a key contributor to pulling down the WPI headline reading. We'll have to wait for the internals, but both these factors, I believe, should have contributed to the downside here.
Okay, I'm not able to make my peace with these numbers because I have not yet seen them. But I mean, I'm not able to get it on the website. But the vegetable inflation still is very high. But primary articles inflation has fallen to 3.86. Last month it was 5.28. So I assume there has been some reduction. But a 3.58 number is really cool. It's something that the markets will be very happy about. Where are you penciling in a rate hike at all, Upasana?
A rate hike at this point, we are not really penciling in. At least till the June meeting, policy meeting, we are not really expecting any action. And then the sustenance of crude oil prices will probably be helping us decide the side that we would like to take. But at this point in time, at least 6 months down the line, we're not expecting any rate hike.
Well, I think it's been released in the economic advisor industry website, in the EA industry, not in the not on PIB. And now we have everything. Yeah, 3.58 is the overall rise in commodity prices. 3.86 is the rise in food prices. Manufactured products 2.61, and that's actually welcome because we were lingering at much lower rates earlier. And fuel and power have risen by 9.16%. Within manufactured products, what has been able to raise product prices month on month? Not much. Basic metals have gone up, and steel has gone up month on month. Year on year, they have gone up considerably. Metals have gone up by 10%, and steel has gone up by 6.2% year on year. Month on month as well, steel has gone up by about 2%, 1.8%. That's the positive. The negative, of course, has come from sugar falling a little bit month on month, and tobacco products as well. So that's dampened the rise in manufactured product inflation. But important point is a lot of producer ability to pass on prices has come, especially in the metal space. Upasana, well, that's it from the WPI space. Any last comments?
No, I think it's a welcome reading at this point in time. Imported inflation really is helping. I mean, it's really, the rupee appreciation is really helping. And at the same time, I think the food inflation has significantly surprised here. on the positive side, and if this momentum is continued, then at least the transfer from WPI to CPI, the threat is going to be minimized, and hence I think it's a good reading at this point in time.
Okay, we'll leave it at that. Thank you very much for joining us. So the inflation has come in lower than expected at 3.58, and possibly it's food coming in at 4.7 would be a bit of a relief compared to last time when food was up 6.6%. And likewise, we have seen a significant fall in vegetable prices month on month. Although year on year they look high because of onions, month on month there is a considerable fall in vegetable prices. So a bit of a relief. October inflation has been revised 10 basis points higher, or 9 actually. I think last month it came at 3.59, and now it's revised up. Not much anyway, since it is below 4%. So that's another positive tailwind, actually, you will have to say. We've got growth without inflation jumping too much at the wholesale level. That's a positive. Okay, all right then. So that's about the WPI inflation data point. Well, on that note, then let's get straight to our movers and shakers segment. And let's start off with Nisha. In fact, the big deal she told us about, CNBC TV18, in fact, told you first, and it's confirmed. IDFC Bank will merge with Capital First at a swap ratio of 139:10. Nisha, who broke that story, she's with us today. Nisha, fill us in with all those details. You told us last week, and it came through over the weekend.
Thanks for that, Nigel. Of course, CNBC TV18 was the first, and last week we were the first ones to really create a lot of noise about this transaction. Finally, it has been announced over the weekend. Now, today the markets have really reacted in the manner which was really expected by the analysts as well, because it is more dilutive for IDFC Bank shareholders, and therefore that stock is in the red, and Capital First shareholders are the ones which are gaining. So definitely it is at a premium to the last closing price as far as the 13.9:1 swap ratio is concerned. Therefore, Capital First is reacting in a positive manner. A lot is really riding on the kind of retail growth that V. Vaidyanathan, the head of Capital First, after joining as the CEO and MD of IDFC Bank, is going to bring to the table. But a few things that we are focusing on, and is CNBC TV18 exclusive. First of all, is that shareholder voting is going to be extremely critical. Remember, shareholders were the ones who stalled the last attempt of Shriram Capital merger with IDFC Limited, and this time it's going to be crucial, because remember, IDFC Limited, which has 54% stake as the promoter of IDFC Bank, has only 15% voting right in this, and the rest of the minority shareholders will have to give in their 75% of voting share in favor of this merger for the IDFC Bank Capital First merger to go ahead. It's going to be extremely crucial, because the single largest entity and the shareholder outside of the promoter is going to be the Government of India with 7.7% stake. So if the market thinks that it is more dilutive for the IDFC Bank shareholders, then the government will really take stock of that and will be voting, will be taking that decision, which is going to be extremely crucial. Apart from that, remember, IDFC Limited, if it gets diluted, will have to ramp it up to 40%, which they will be buying out from the market as well. And Warburg Pincus is looking at holding on to 10%, provided RBI really approves of any entity holding more than 5% stake in the merged entities. These are the newer details which are really coming in. But remember that shareholding voting is going to be extremely crucial and critical to watch out for.
All right, thanks a lot for that, Nisha. We will be able to speak to the IDFC management in just a few minutes from now, probably about 15-20 minutes from now. Meanwhile, Abhishek is here to tell us why HDFC is up 5.7%.
Well, Lata, HDFC Limited over the weekend had announced that it has raised about 11,100 at about 1,726 per share by giving shares to investors. So the board of HDFC Limited has also approved another round of fundraising of up to 1,900 crores via QIP. So in total, HDFC Limited is looking to raise about 13,000 crores from the market in FY18. Who are the participants? Now, HDFC Limited is expected to allot 6.4 crore shares to the investors of like Waverly, Omas Admin, Silverview, Ajim Premji Trust, etc. So what does this does on the equity and book value? So the equity dilution, given the fact of the CMP and the amount raised, is about 4%, and the book value can increase by 19%. So that is the kind of effect that is seen on the stock market today. What are the objectives of fundraising? About 8,500 crores out of the 13,000 crores that they plan to raise will be used in the QIP of SDFC Bank. They are also exploring inorganic opportunities in the health insurance sector while also looking at stress and resolutions in real estate players. Back to you.
Okay. All right. We did speak with Mr. K.K. Mistry, the Vice Chairman and CEO of HDFC on Saturday as soon as this announcement came in. Listen in.
Out of the 13,000 crores of capital issue, 11,000 crores will be in the form of a private placement, and 2,000 crores will be in, or roughly 2,000 crores, it's 1,896 crores to be precise, will be in the form of a QIP. 8,500 crores was to be invested in HDFC Bank. Then we had also said at that time that we need some capital for our foray into health insurance, because we believe that the health insurance market in India is huge and affords massive opportunities, and we could look at both organic or inorganic growth in that. We could, with our expertise on real estate, be able to acquire those projects in an incomplete stage, get a good developer to complete the construction, and then give it the HDFC brand and sell it in the market at a higher price. So this was the reason why we said we would raise capital. We were planning to raise capital.
Well, that's about the big boy HDFC, but in fact, there are plenty of stocks that are in the news today. So let's hop across to Ronit. He's standing by. He's going to give us that list. Ronit.
Thanks, Nigel. So I'll first start with Syntex Industries. The stock is down close to 5% today, and they came out with a weak set of numbers over the weekend. You know, revenue was up 44%, largely because of capacity expansion, but the margins they took a beating, came out around a 4-quarter low at 6.9%, as well as the PAT fell by 50%. Now, moving on, why the margins were low? Largely due to a rise in the raw material cost, that is cotton. And if you see the margin trend as well, you know, it's been declining right from Q3 FY17 from 14.2 to all the way to 6.9 this quarter. Now, moving on to Bhansali Engineering. This stock has been on a tear, and oh my god, the results, they came really good. Revenue more than doubled, 257 crores. EBITDA was up 5 times, as well as the PAT was up 10 times at 29 crores. Now remember, they have a current capacity of around 80,000 million tons per annum, and they're planning to expand it by 50%. And one of the reasons for this jump in revenue is due to styrene prices, which is their core product, which is up more than 50% in the last 1 year. Moving on to IRB Infra, so reports suggest that Italy's Atlante is in talks to acquire the road assets of IRB Infra for around $2 billion. Remember, the market cap is much lower than that, as well as the assets include the Mumbai-Pune Expressway, which is the iconic one, as well as the deal could be the largest overseas strategic investment in India. Moving on, IRB Infra told us that they do not comment on any market speculation. And finally, Venus Remedies. This came on the weekend as well. Exim Bank has declared the company as well as its directors as willful defaulters, and the company came out with a notice saying that they deny this contrary and they deny this step, and this is illegal, as well as they'll contest this decision going forward.
Okay, thank you very much, Ronit, for that quick list. And here's a recap of those that are buzzing. IDFC Bank and Capital First, of course. HDFC, the tallest gainer in the Nifty, and the Sensex. Venus Remedies for some wrong reasons. Syntex Industries, Bhansali Engineering for results, and IRB Infra for potential acquisition. Muthoot Capital as well. Good numbers.
Okay.